Welcome back to discuss investment banking. Today we'll be discussing client sourcing, module 5, client sourcing and relationship management. This module explains one of the most critical drivers of success in investment banking, the ability to identify, attract, and maintain strong client relationships. Investment banks depend on continuous deal flow, and this is only possible through effective client sourcing and long-term relationship management. Looking at the module objectives, at the end of this module, students should be able to explain the importance of client sourcing in investment banking, identify strategies for sourcing corporate, institutional, and government clients, understand the concept and process of deal origination, explain how investment banks explain how investment banks develop and structure financial opportunities, analyze the role of relationship management in sustaining long-term partnerships, understand the principles of effective investment pitching and financial advisory, evaluate the importance of strategic networking in financial markets, apply client sourcing and relationship strategies to reward investment banking scenarios, assess how strong client relationships contribute to business growth and profitability. By way of introduction, investment banking is not just about financial expertise, it is fundamentally a relationship driven business where success depends on the ability to continuously attract clients and generate transactions. Unlike retail banking, investment banking is proactive. Bankers must actively search for opportunities, build networks, and create relationships that lead to future deals. Client sourcing and relationship management determines how deals are initiated, developed, sustained over time. Strong relationships often lead to repeat business and long-term revenue streams. Let's look at Slayer's client sourcing overview. Client sourcing is a strategic and continuous process that involves identifying potential clients, understanding their needs, and positioning the bank as the best partner to deliver financial solutions. Strategic importance of client sourcing. Client sourcing is the foundation of all investment banking activities. Without clients, there are no deals, and without deals, there's no revenue. It drives pipelines, revenue generation, and market positioning. Let's look at the deep pipeline concept. Investment banking relies on a pipeline system. What is the pipeline system? It goes from prospect to engagement to mandate to execution. Client sourcing feeds this pipeline, ensuring a continuous flow of transactions and opportunities. Let's look at client segment. What is client segment? These are different types of clients, or different types of clients require different approaches. So investment bankers work with corporate clients, institutional investors, and government entities, each with unique needs and expectations. Let's look at the first category, which is corporate clients. Corporate clients are typically growth driven and require capital for expansion, restructuring, or strategic initiatives. Bankers identify opportunities based on market expansion, financial challenge, or industry trends. What about the next category, which is known as institutional investors? Institutional investors are sophisticated and data driven. They seek high quality deals, risk adjusted returns, and diversification opportunities. Banks must position themselves as trusted intermediaries. Now, we also have government clients. The government requires high scale financing for infrastructure and development. Investment bankers must consider political risk, regulatory framework, and public accountability when engaging with this client. Let's look at some of the strategies when it comes to client sourcing. Client sourcing combines analytical insight and relationship building. It involves proactive identification of opportunities, networking, and data-driven decision making. Let's look at the first, which is opportunity-based sourcing. This is where the investment bankers identify financial needs before clients do. For example, expansion, restructuring, or industry consolidation create opportunity for capital raising or advisory services. Then we have relationship-led sourcing. Relationships are powerful tools in sourcing. Bankers leverage networks, alumni connections, and previous engagements to assess decision makers and generate opportunities. What about for intelligence-driven sourcing? This is where modern sourcing rely on financial data, industry reports, analytics to identify hidden opportunities and approach clients with tailored solutions. The next, which is cross-border sourcing. This is globalization, and it allows banks to connect investors and clients across regions. This includes capital flows between developed and emerging markets, increasing opportunities but also complexities. Let's look at something very important in investment banking, which is client engagement process. Now, after you have sourced for clients, you need to engage, or this investment bank needs to engage in structured stages, including initial contact, assessment, value proposition, and relationship development. Let's look at some of the challenges in client sourcing. Client sourcing is highly competitive and influenced by economic conditions, regulatory barriers, and access to key decision makers. Let's look at technology in client sourcing. Technologies such as CRM systems, AI analytics, and financial database improves efficiency, personalization, and data-driven decision making in sourcing clients. Let's look at some of the ethical considerations in sourcing. Client sourcing must be ethical. Bankers must avoid misleading information, maintain confidentiality, and ensures transparency to build trust and credibility. Now let's look at what a deal is. Deal origination transforms identified opportunities into structured financial decisions. It is one of the most strategic functions in investment banking. Now, what is the process of the deal? The process includes opportunity identification, financial analysis, deal structuring, pitching to client, and securing mandates from clients. Let's look at some of the types of deals. Investment banks originate capital raising deals, merger and acquisition, structured finance, and advisory transactions, each requiring different expertise and strategies. Let's look at the role of investment bankers. Investment bankers act as strategists, analysts, and advisors, ensuring that financial solutions align with client objectives and market conditions. What is the skill needed for deal origination? It include financial modeling, strategic thinking, communication, negotiation, and problem solving, which together enable successful deal execution. Let's look at relationship management. What is relationship management? Relationship management focuses on building long-term partnerships with clients. After you have sourced clients, you have managed relationship. After you have sourced client and you have seen how to go about it, how to make a deal, you have to do the next thing, which is relationship management, where you focus on building long-term partnerships with your client. It goes beyond transactions to create sustained value and trust. Importance of these relationships. Strong relationships ensure repeat business, enhance loyalty, and create opportunities for cross-selling services, making them a competitive advantage. Let's look at some of the principles of relationship management. Key principles include trust, client-centric approach, consistent communication, and continuous value addition. Let's look at the relationship life cycle. Relationship usually evolve through stages. We have the first initiation, development, maturity, and retention. Each stage requires different strategies to maintain engagement. What are some of the roles of relationship managers? Relationship managers act as the link between client and the bank, ensuring consistent communication and identifying new opportunities. What is cross-selling? This is a term in investment banking. This is where strong relationships allow banks to offer multiple services to the same client. This is known as cross-selling, thereby increasing revenue and strengthening engagement. What about investment pitching? This is the process of presenting financial solutions to clients to secure mandates. It combines analysis, communication, and persuasion. What are some of the components of a pitch? A strong pitch includes client analysis, market insights, problem identification, proposed solution to the client, financial analysis, and execution strategy. What is financial advisory? Advisory services provide expert guidance on mergers, capital structure, restructuring, and strategic decisions, helping clients maximize value. What about strategic networking? Networking is essential for identifying opportunities, building relationships, and maintaining industry presence in investment banking. Networking channels. Networking occurs through conferences, financial institutions, professional associations, and corporate engagement, each providing access to opportunities. What is about digital networking? Modern networking involves platforms such as LinkedIn and virtual events, expanding reach and accessibility in global financial markets. By way of conclusion, this module demonstrates that investment banking success depends on relationships, communication, and strategic positioning, not just financial expertise. That is what you have just learned. So investment banking does not really depend on financial transactions. It also depends on relationships, how you communicate, and how you position yourself strategically. For the end of this module, there's an assessment where there's 15 quiz questions and a report to test your understanding. I'll see you in module 6.